Yeah. You guys ready? All right. Guten Morgen. Como televo? How are you? Welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal, putting together a trade plan or 2 or 20. Let me remind you that trading is risky, not appropriate for everyone. Past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. I'm not joking. I did so many sit-ups today that just reading that disclaimer hurts. I'm not even joking. So anyways, good morning. How are you? Oh my tummy. There we go. How are you? What's approach to market and strategy? Oh, there's an open-ended question. All right, cool. So today we will go over gold, oil, Bitcoin, dollar pairs, and yen pairs. Pretty much it. If you need something else, let me know. I will do my best to help. What's up, Barry? Barry! B-Man. Be airy. If you need additional help, let me know what you want me to cover, and I will do my best. Additional resources are available below the video. In the description, you will find a link to my trading book, Strategic and Tactical Forex Trading. You will find a link to my chart templates at metatraders.com. You will find a link to free training videos at youtube.com/fxbootcamp. You can find premium training videos and live trading groups at fxbootcamp.com. The link is in the description below. And, of course, a link to tradersway.com, an excellent, ethical, trustworthy, effective, fast foreign exchange broker that I trust. They also pay huge swaps, which is very important, I think, to being a currency trader. Your lousy broker or your last lousy broker probably charged you negative swaps on both sides of your trades. Traders Way pays you huge swaps. It's just another reason why I love them. Tradersway.com. Sultan's like, what's your core style of trading? I am a macroeconomic trend trader. Sultan says, when will your broker offer trading via platform? Why don't you contact support and ask them? All right, so let's get off that. Let's just start with the indices. Where is we and where shall we be? Yen strong. That's cool. I've been buying yen. Dollar up and down, turn around. By the way, there's rumors that it's going to be an up day in the stock market. So why don't we go there? By the way, watch this little trick. I have this little plug-in. You go pop, and now I've popped MetaTrader Web Trader out of the web page. Isn't that cool? Next secret is to open this up and change it from MT4 to MT5. Pachow! And then you get, this is the S&P 500. Of course, there's a lot more available than just the S&P 500, but that is the S&P 500. I have these little fractals on. They don't seem to be that helpful. I don't know why people use them. Maybe on a higher time frame it's helpful. But what the media is telling me is that today is going to be an up day in the stock market. Okay, that's great. I bought the stock market yesterday, so good, great, fine, great, good. So anyways, we'll see. Do you use fundamentals for day trading? I use fundamentals for alt trading. You cannot be a macro trader, Sultan, and not use fundamentals. So I just decided to use my economics degree from Harvard. I know, right? He keeps bringing it up. And apply that to my trading. Yeah. Barry, I was going to on the way, waiting for a way up, and then it's been down. So I kind of avoided it, but I've been trading yens. So it was weird. I was planning on to, and then honestly, I just didn't get around to it. So anyways, kitty cat. Okay, slight recovery here, maybe interesting. Okay, the big trend going on right now. I love the yen. I've been buying up the yen. Good. Yada. Dollar up and down, comes around, spits and furts. Pound, okay, look at just, again, all over the place. And the funny thing is, I was selling pound last night, moved the stop to break even, and I said to myself, I should put a limit order way up high to get back in if it gets knocked out. And I didn't do it. And then, of course, this thing rallied, knocked me out, went up, made a beautiful entry, and I'll show you on the pound yen, and then came back around. So it was just still some volatility in there, but I get it. It makes sense. It's fine. And then Aussie, yeah, Aussie's still paying. Love it. Been very happy with the moves in the Aussie. And Kiwi's kind of coming around with it. Hang on, let me change this. Something right with the world today, but I don't know what it is. Living on the edge. There we go. So anyway, yeah. Yeah, I do, Sultan. How about that link in the description below the video that says, link to my free training course? That would be it. Yeah, or Lucas is saying, hit the rewind button and then press play. Hey man, Sultan, I've been doing free live streams for 20 years. Yeah, but check the description below, man. There's lots of resources. By the way, love the enthusiasm. You're in a welcome place, so don't feel like we're beating you down like a dirty dog. Okay, so looking at euro dollar, okay, I got this kind of plugged sideways here, okay, and I'm waiting for the 21 to catch up. No, is it moving now? Johnny's like, there it goes. All right, I'm just going to skip. Yes, I have read the history of the Anglo-Saxons. Johnny's Oscar Mike on this one. Cool. You taking it? Gotcha, man. 102. Are you scalping it or buying and holding? Good morning, Rolu. Roglug. Rose Luge. So you use support. Sultan, the questions are funny though. It's funny. You're like, do you use fundamental analysis? Why the hell would I not? So you use support and resistance. How else do you trade? Like it's funny. It's funny. So the answer is yes, but you're asking me like, Wayne, do you breathe air every day? Yeah, I try to more than once every day. Take a deep breath. Yeah, of course I use support and resistance. How else would you trade? But yeah, of course. Do I use fundamentals? Yeah, of course. Of course I do. When I drive my car, yeah, both the brake and the gas. Yep. And I try to steer it too. So I use the steering wheel. Yeah. But good questions, but they're funny. They're funny. But you don't know me, and you probably have burned through 15 or 20 YouTube gurus. Okay, I get it. It's still funny because it's like, how else would you trade? Do you use fundamentals? No, it's all in the price, Sultan. You don't need to know why the market's moving. You don't need to know why things are priced the way they are. Central bank, you don't need that monetary policy nonsense. I mean, like, oh my God. But I'm sure people say it. I'm sure people say it. So hey, I'm not knocking you, man. You're cutting through the fat quick. That's good. So yeah, I use logic and intelligence. Yup. Anyway, so Bitcoin coming down still. Did it go much further than last night? Not really. It's still about 30, right? Hit 30. Which is interesting, right? So the bling bling indicator. I have my bling bling indicator. So anyways, so Johnny's like, there goes WTI. You could trade this as a double bottom for sure, right? What would be there's always the one right now. How do you enter oil? Okay, what do you want on here? That's how you do it. What's the best entry? Whatever you planned yesterday would be your best entry. There you go. That's how you do it. Now, that's not the setup I wanted. I have to adjust this. This EA, I guess, is not quite ready for oil. I'd do it more like that, and then this one's too high for a scalp. I just want to show you a scalp. There you go. I was just trying to show you a scalp, not a position. There. That's how you do it. What's a 50-50 setup? Yeah, a 50-50 setup sounds terrible, but I don't know what you mean. Okay, so anyways, let's just move on.com. All right, go back to the dollar pairs. Okay. Just kind of marking this out. What it says is that we've hit, what the chart says is we've hit the weekly projected low. It's only a Tuesday, and that can set up a counter trend trade, right? So you got to be careful of some upward move here today. But the bigger part of this move is, okay, we have a setup here. On a weekly basis, okay, we're out of position short. Hit projected target on a Tuesday, there will be profit taking. Okay. And so what you could do is kind of fart up all the way up here. And then by the end of the week, probably resume trend. Unless you believe there's a reason for the trend to end. But I don't know. We'll see. We'll see. We'll see. But right now, the only people trading this are bears, and right now those bears are taking profit. Okay, so be careful. Bears are buying right now. Okay, same thing. We'll take a look at this sucker. Okay, definitely got a nice trend going here. No reason for this to stop. Changes template. How do we want to look at it? Well, we can look at it yearly. Okay. Crazy, right? Okay. The way to read this chart, this top predicts 62.39 as the bottom. The bottom for the year. Amazing, huh? Not really. I mean, look, the top is 70, so it's not that big of a deal. But the bigger deal is we're getting closer to the end. Strategically, I mean, this can go anywhere it wants to. And New Zealand can change some policies, and the dollar can get stronger, and there can be some more geopolitical tension and all that kind of stuff. That's a lot of coulds. Yeah, it could, for sure. But what is we're at the point where it may technically be more difficult for this to fall further. Even if it does fall further, it might be difficult for it to do it. So you should at least in here be cautious of, reversal patterns, for example, would have meaning in here. Okay? If you shorted the pullback somewhere, your stop was probably here, and now your stop was there. Now your stop is here, okay? And you can sit and wait, and maybe tomorrow you get your stop there. Unless you prefer weeklies, okay, here's your rollover, okay, top of the year, okay? Big bearish move here. Okay. Makes a Fibonacci retracement. Drops. Makes a Fibonacci retracement. Drops. Very little tracement. Drops. Fibonacci retracement. Drops. little retracement, drops. So imagine if somewhere in here, somewhere in that circle, that's almost a month, by the way. Somewhere in there you get short, you'd be dragging your stop. So if you were short somewhere in this candle, once you survive this pullback, right, your stop would probably be here or here. Comes back, makes a new lower low. Okay, your stop is definitely still here. Okay, survive this pullback. Now you can move your stop above this candle. Okay, survive that pullback. Now your stop is above this candle. Okay, and you're just moving. Okay, you're moving, but you're stacking. Now, one of the things I don't like to do is pyramid when there's no pullback. Okay. Well, Patrick, that sounds a lot more like Ryan's language. Not that we're different, but that's more of his language. So I don't want to contradict, or not contradict, but tell you what my version of that is and use different language and make it so confusing that you're like, well, but Wayne said this, and then he says, well, but that he said, so, save that for Ryan, because again, I don't want to come across as different because it's not really different, but that's his language. So getting to this point, like when you get a pullback like that, that's where I like to add. When you get a pullback like this is where I like to add. And then this one, like almost no pullback, that scares me. And I get closer to like more like want to get out than get in. Okay. Pullback, that's where I like to add. And then this one didn't pull back. So again, I'm more heightened on exit than entry, especially when I'm approaching this green zone. Remember, green means up. And if I'm a bear, I want out, right? But let's say your first trade, you got to stop here in the second trade, and then it makes lower low, lower high. Third trade, and you move your everything, right? You're stacking these. No, up, up, up. Yeah, and all of a sudden you're moving all of these stops down. Okay, down here. And again, when they extends beyond without a pullback, I'm more interested in out than in. So then when you combine that with, Fibonacci analysis, or I'm also measuring standard deviation here, as you can see, right? So this is one standard deviation below the mean. Here's two standard deviations below the mean. And here is the projected low anyways. So, okay. Yeah, he's all good. Yeah, everything's fine. He took everything he needed to take care of. So he'll be back, or is back. Okay. So anyways, as we approach, let's say 62.5, probably a good idea to book some of those profits if you had been on them since then. What's up, Rodo? These are just candlestick candles. Nice, huh? What do you stink? If you're in the live groups, dude, then you can talk to Ryan any night. You got an hour a day with Ryan if you're in the day trading group, so you can ask away. Now, if you watch the videos, then maybe pop him off an email. All right, so let's work on this one. Maybe. I don't know. I'm hoping we get a rally in commodities today. How's that oil trade doing? Oh, wrong one. Oh. Making money, honey. So up the equivalent of 25 pennies, pips, 25 pips. Okay, cool. So it's still doing its thing. You can go back to commodities and just check on it technically. So obviously the big challenge here is we need to breach this. Okay, this is the one that's holding us back. And then it'll pop up to the next, which is there. Solomon says, where do you think gold is heading? I don't think. That would not be analysis. So let's look at it differently. Let's break it down. Okay. Okay. What do we know? Okay, it's not what I think, it's what do I know? Okay, gold came up and hit the projected high for the year. Okay, went a little higher, of course, but on January 1st, we said 2028 to 2088 would be the highest gold would go this year. And it came to 2058. So right in the middle there, not too bad. Cool. And then it's since collapsed. Okay, because when you hit your target early, you very often, not always, but very often, revert back to the mean. You're like, that's not the mean, Wayne. This is the mean. No, but what I mean by mean is central pivot point. So anyway, so it comes back to the central pivot point. So going back to Sultan's, was it Sultan's question? No, Salman's question. What do I think about gold? I'm neutral. Okay, neutral. We're kind of like just heading back to where we should have been. Central banks bought gold, central banks have sold gold, and we're right back to where we were. Okay. Cool. Cool. So for some, this might be a double top. I'm not ready to declare that because I don't trade this just pure technically. I say, well, there's a lot of interesting things going on in the world of commodities right now. So I wouldn't just like dump this and all that kind of stuff. Like, I don't really actually care about gold. It's sort of like your old man. It's like your grandfather's crypto, right? Let's see, you can't really use it. I mean, you're like, Wayne, there's a lot of use case. You can put it in your teeth. Okay? Great. You can make electronics out of it. Good. What do you do with it? What do you do with it if you bought some physical gold? Well, I don't really do anything. You can't even buy a loaf of bread with an ingot of gold. So there's almost no use case. Is it a store of value? Yeah, sure. As long as people want it. Okay. Is it a medium of exchange? Well, if you can't buy a loaf of bread with it, then it's not really a decent medium of exchange. Of course, it has high carrying cost, because if you had, $300 million worth of solid gold, you'd need to put it in a vault somewhere, and then you'd probably want security cameras, and maybe a security company comes and checks on it every once in a while. Okay, now it's expensive. So it's not really a great asset. It doesn't provide any income. And if there's a zombie apocalypse, you can't eat it. Right? So anyways, a lot of this move here, and we talked about it as it was happening. This was the purchase of central banks. Okay. So maybe they'll start offloading some of this later. Okay. Okay. I'll tell you what, Sultan. You're eager for information, which is great. I'll tell you what. You sign up for FX Bootcamp. 65 hours of videos of you learning how to trade. 65 hours. It's $88 a year. So I'll tell you what, why don't you sign up for FX Bootcamp, pay the $88 a year, and watch some of the videos. Come back tomorrow? Yeah, we'll discuss that. You're right. You want to know macro, you want to know this, you want to know that, you want to know how to scalp and how do you do this and how, dude, show me that show me you're legit. Pay the $880, right? Pay the $88. Join our community. And then ask 15 questions. Step up now. I'm willing to help. Step up. You're like, I don't, right? Make a tiny commitment. All the information's there, bro. Okay, make a commitment. Let's see. I'll help, man. Like I said, I ain't beating you down. I love the enthusiasm, but just show that you got follow through. I was listening to a guy who was preparing, I think he said he was preparing for a class. Anyways, he was talking about a professor that was going to teach a business class at a university. And the story goes where the professor gets in front of the class and he says, 5 of you have what it takes to even be a business person and everybody else doesn't. So let's start with that. You want to be an entrepreneur? You probably can't do it. You probably can't do it. You don't have the work ethic. Oh, you have the dream, which is really great, but you don't have the work ethic. And I thought, you know what? That would be the great beginning, right? A good beginning to a business class on entrepreneurialism, right? The professor comes in, you're like, yeah, all you guys, you don't have it. So anyways, it just comes down like the enthusiasm is great and you're asking good questions. It's great, but you got to show that you're the one that has more commitment, not just enthusiasm, more commitment. And I'll tell you, we got a lot of committed people here. So let's take that and your enthusiasm and turn it into conviction. Anyways, this goes back. Right? This goes back to something I did on Sunday. Just this idea of the potential importance of follow through here in the market. And so the trade plan was selling way up here at 92 something. But the issue was being above here, this question area. We were in a scenario of if this is coming down, would price go to 94? I think it was, right? So I think it was like it, right? If this is bearish and you sold at 92, would this, if I'm struggling, I'm sorry. If the market is bearish, what's the likelihood this still goes to 94 and then turns bearish? Which would be, if you go back to Sunday, we were here. that would mean we'd have to make a higher high on a weekly candle. And the day trading group said, yeah, very unlikely. Then I said, well, then that's what you need to be playing this week, is if that's what you think, then, your area of risk is here. So what's the potential opportunity? And we're like, oops, this is my mouse struggling here. Okay, is this. Bare minimum, right? Down to the future 21 EMA, right? Okay. So it'd be interesting, right? Now, the follow through is if this is a top, which it could be based on multiple reasons, but nonetheless, if there's follow through here and you believe it is, more than just a retracement to the 21, but instead a significant move downwards, doesn't matter because a bull will buy that 21. Okay. Okay. Well, if you're studying business, Alton, right? I'm an entrepreneur. I'm a venture capitalist. I'm a currency trader. I'm a macroeconomist, right? I have a master's degree in financial management, right? Yeah, we get into a business a lot only because that's who I am. So that, I look at Forex as a startup. So anyways, so maybe that's good, but all right. So here's what I'm getting at. In the future, which we don't know, we're only trying to predict, a bull would buy around this price. And a bear is already short at this price, or at least I am. And I explained it on Sunday, the whole thought process. Great. So you have to understand only one of these groups is right. The bulls or the bears. The rest is time and price. At what price does a bull buy? Well, currently that'd be around 88, somewhere between 88 and 89, but we don't know the exact price because we don't know the time. We're not down near that price, so it's not the time to buy. But it's quickly approaching. It might be next week. Could be. But again, we don't know. It's very speculative. But when we get down there, so imagine this moving average is moving up and to the right over time. So in the future, it'll be here. So next week could be another down week in which you might run into the price and the time. Okay, this would be, a big red week next week would create the setup for bulls, which would then create the next candle, which would be a green week. Okay, so somewhere down in there, maybe a bear should take profit. Okay. So now we're thinking 3 weeks ahead. But what about the bears? Well, the bears are convinced this is no joke. Okay. So that for them, a top is here and they would also top there. So let's say then, we have 2-3 weeks up. And then what? A bear's going to sell a double top. So now a bull should exit there and we resume. But how important is a double top going into summer? Well, very significant, right? So now I'm still talking about this one, by the way. And a double top would need, because all double tops have the same need, to break this low and make a lower low. So it could be 2 weeks down, 3 weeks up, 8 weeks down. Okay. Okay. And then, of course, after that, there'd be a retracement and then that. Cool. Cool. Okay. Which would probably be third week of August to about the second week of September, and then drop all of October. And then we'll buy it for a new higher high in November. Oh, I know. Oh, it's beautiful, right? Beautiful. It's a beautiful trade. Don't let it get away. It's a beautiful trade. Yeah. I need more coffee. More coffee! I need to get a wench, man. Or a minion. Maybe a minion. Nah, wenches are prettier, but they talk too much. So, yeah, I need to get a minion. All right, so that's that. How we doing here? I missed this one, but I'm in it. I'm in it here. That's why I marked this last night. So, in a discussion, I think it was Sunday night, we discussed a breakout trade. Right? Basically, we trapped it. And by trap, there's two trades. When you trap, you know what direction you're trading. Some people are like, well, in the range, you buy at the bottom, sell at the top. And I'm like, dude, no, you don't. Okay. It'd be great if everyone that was that strong and that fast, but very few people are. So when I trap, I create a range like this, but you're only a bear. That's it. There's no discussion. There's no buy at the bottom. What kind of bear buys at the bottom? Well, profit taking. Well, that's not what we were talking about on Sunday evening. So again, the day trading group meets at Sunday evening. So on Sunday evening, I gave the example of the breakout, right, entry or the pullback entry. So I threw down as an example, you would throw a limit order down there. Okay, put your stop above here and take her down. It was only sell or don't sell. There is no buy. Sell or don't sell, right? Simple enough. So on this account, look, I missed it. It's still there. Right? On my other account, my trading account, I'm in here. And you can see why, where it breakout, pullback, and it was on the pullback somewhere in here. And yeah, and that's what's going on. And you could just see it like right there, just a little farting around. You're like, dude, but that's such a small trade. Well, if I may, okay, it's not that small of a trade. It's down, pullback. Okay, you got this as your roll reversal. La 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 la. Okay, kick it over here, baby pop. Right, kick it off the 21. Okay, golden. Golden. For you new guys, you're like, what are this red area and green area? Okay, those are price action pivot points. Pivot points not based on market forces, but pivot points based on price action, and that's why there's a slope to them. Oh, snap. Yeah, that's mine. It's mine. It's mine. It's ours. FX Bootcamp. Price action pivot points. Okay, cool. Sweet. All right, so Making money. Okay, so here you go. And like we were talking about earlier on the weekly candles, this is a re-entry. Okay, this is a re-entry. We can look at this slightly differently if you want. Okay, how about this? Okay. Let's do this. Day trading bearish bias, which means only someone with a bearish mindset or bias would use this. A bull would not do any of these trades. I've cleared out and deleted all the extraneous information that a bull would look at for a decision. So there's only bearishness here. So you'd have to already be a bear. Okay? Lower low, lower high. Look at the sell zone that day. Down. Okay? Look at this little one in here, right at the open. Okay? Look at this. La, 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 la. And what do we see here? What is this? You're like, Wayne, why is it hanging out there? It's tomorrow's sell zone. So when I say, when you're in New York, in the New York trading session with me in these live streams, if you're just doing New York, you don't know what you're doing. Because the trade that has occurred, the trade of the day trade, occurred really pre-London. And that's what's happening. So you're like, what's going on in New York today? Hey, fellas, what are we doing? What's the trade, up or down? Like, dude, you're polluting the room. We're not planning now. Dude, we did that hours ago. Hours and hours and hours and hours and hours. We did that yesterday. Okay? So what's going on now? Well, we're planning tomorrow. And based on our current analysis, okay, this is what's going to happen between now and New York tomorrow. So what are you going to do about it now? You need to be planning tomorrow's trade. Okay? Now. What are we doing in New York? Planning tomorrow. I might sell it now. I might sell it at the close. London close. I might sell it New York close. I might sell it Asia open or whatever. But tomorrow is tomorrow. Okay? Cool. So how do you trade it? Oh, you do something like this. Done. Oh, I don't have my protection on, right? So you say 33,333. Obviously, I'm a macro guy. If I have a 333, 10 to 1. I have a 10 to 1 risk-reward ratio. Or reward-risk ratio. So anyways, okay, and then you're done. And if it drops down in here, then and you feel like you missed it, then move it to here. You sell high, dude. You're a bear. Sell high. Where are you right now? Oh, right here now, but you want to sell it a little bit higher. That's what you're always doing as a bear. Yeah, I see where we are now, but I want to sell it a little bit higher. You might say, I want to sell it off the 21, but remember, you have to cover your spread, and then it's moving down and to the right in the future, so you're doing that. So you're like, well, maybe I want to sell it around there. Cool. Or you want to sell it off of use the pivots, not the moving averages. So you want that one, or you want lower. I can't get lower because that's where we are now, but you can say, well, if it comes up a little higher, I want to drop it like it's hot. These are all decision makings, but you're not here figuring it out first. Or I mean, like looking at this and making decisions, right? If you had done that and incorporated higher time frames, you would have sold this. You understand? Like, that's multiple time frame analysis. Excuse me, let me get rid of this. Okay. What's going on today? What's the day trade? Wayne, can I day trade on a 5-minute chart? Only if you have a sense of bias and higher time frames. This sell, okay, didn't work because of candlestick pattern. It didn't work because of your oscillator. It worked because this price was already important. Now, sometimes it's a pivot point. Sometimes it's a bigger moving average on a like a 4-hour 21 or something. There's a reason. This is not magic. It's not random. There's a reason. So when I look at my 4H and my 1D and maybe my 1H, I make a decision here strategically. Strategic. And then I say, aha, we're almost at the right time and we're almost at the right price. I want to get ready to sell. So I have a strategic decision to drop into a 5-minute chart and get ready to sell. And that might be in here. Okay, because we're approaching the 1 hour, the 1 hour 21, the 4 hour 5, and whatever, right? And then we get into here, and I'm like, it's going to turn. It's going to turn. It's going to turn. It's going to turn. Bearish engulfing candle, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower low. I mean, at one point, since I'm already sitting here ready to pounce like a tiger, when I see that bearish engulfing candle, I'm a killer. It's not going to be pretty. It's going to be devastating. Okay? Okay? There's about 6 hours of waiting. Okay? And 5 minutes of bloodshed. Okay? Okay? So we call this tactics. Okay? Tactics. But without strategy, what you'll find is your tactics will be, on the very long run, probably inconsistent. Because you might say, sell here, because it was down. What? But what you forgot was your strategic analysis told you up here was the first sell, not down there. And you're like, when did you come up with this price, 82.78? Yesterday. Not the day we're looking at. The day before looking at that, we came up with that number. So yesterday, let's say 12 hours or so, but I'm just making a point, like many hours ahead of time, we're like, yeah, I'd sell somewhere around here if I were me. Okay. Okay. That's all. Cool. Dollar week right now. Interesting. That could lead to a rally. Whoa. Where did the, there it is. Yeah, that definitely points as a risk on day. It's good. I put a lot of money into the stock market yesterday, so if it goes up today, I won't be crying. Home Depot says my delivery is scheduled and will arrive somewhere between 6 o'clock in the morning and 8 o'clock at night. Oh, yeah? How about that for accuracy, huh? And what they should say is, and a 30% chance it won't arrive at all. How funny. Anyways, so risk on day today? Okay, well, that would probably go against my current yen positions. So I have to ask myself, did I make the right decision? And then I go back to my original analysis. And remember, it was just based on what occurred, not what I thought was going to occur. It's just, okay, that is that. So stops are at break even. I think that Aussie yen is up, I don't know, 150 pips or something like that. So I hope I don't get knocked out at -3. That would be a bummer. Luis did buy. Yeah, I bought a bunch of things. I was bitching and complaining because I bought some. I mean, let's go back. The stock market was rallying in September, October, November, and December. And I didn't buy because I thought everything was overpriced. And I told everybody that. In fact, I had been saving money since summer. Why was I saving money from summer? So I could buy the stock market because I thought it would fall somewhere between 10 and 20% right at the beginning of January. Can anybody confirm it that much? That you knew 6 months in advance I'd been saving money and that I was going to deploy capital at the beginning of January when the stock market falls 10 to 20%. This will help. I want to impress the new guys, the new, right? Just make sure, right? Yeah. Good. That's all. Because otherwise it's just hindsight stuff, right? Cool. By the way, I got some Bitcoin, so we're going to watch some Bitcoin for a second here. My Bitcoin just arrived. So anyway, so I saved cash, and then I bought around the third week of January, which was, by the way, in August. My plan was to buy the third week of January. Like, that's specific. That in the beginning of January, it's going to come down 10 or 20%. In the third, I call it a false rally, but it's still an opportunity to buy. So I bought, and then I bought some more at the third week of March. And then I bought some at the third week of April. And because unfortunately it just keeps falling. But one of the things I was bitching about back in March is that I bought essentially a double bottom, but I wasn't able to get the things that I wanted to buy. Not all of it. So I bitched about it, and some of you guys commented because I'm like, man, I got too much cash. And people were like, first world problem, man. You're like, I know, it's terrible, right? I'm like, no, but you got to understand. I set it aside to invest. I can't spend it. I can't eat it. I can't buy shoes. I can't buy a boat. I can't. It's a tax issue. I pulled that money out of paying the government. I have it aside to invest. So I have to invest the cash. But the idea is we're getting crushed by inflation. So my cash is losing money just sitting there. But, I'm kind of caught between a rock and a hard place because, I put it in the stock market, lose 10%. I'm only losing 8% in inflation. So anyways, but I'm a buyer. I'm an allocator. And I had too much cash. And so what I'm getting at is I've been adding to that pile faster than I've been investing. So yesterday was like I basically drew down my cash. And so I went from 50% cash down to like 30% cash, down to 15% cash, now down to 10% cash. And now I'm probably at 5% cash or maybe even less right now. But don't worry, because next month more cash will come in. But right now I'm basically fully deployed. And as an investor, that's a pretty exciting time. And so it took me from January 1st to essentially May 1st, May 10th. It took me 5 months to fully deploy my capital and build a portfolio. Okay, in a long-term portfolio. And I have to admit, though, I only have one profitable investment. One profitable investment. Hey, man, it's a long-term investment. But one of those stocks, actually, it's a real estate investment trust. It's up. Listen to this. It's up. Up. Everything is down, right? I started buying at about 25 or 30%. Most of the things I bought were like 50% discounts from their highs. And they still went down, right? But one of the real estate investment trusts that invests into and develops old folks' homes, up this year 20%. I'm like, holy smokes, huh? Like, oh my gourd. Oh my gourd. No, but I might own that one. No, it's I think it's I don't recall. So some of my first investments were old folks' homes, prisons, and dollar stores. Then I bought at a big discount offices. Obviously, with COVID, people were not going to the office anymore, and a lot of the offices were vacant, but the prices had already come all the way down. So I bought it on a huge discount, and I thought, you know what, in 20 years, maybe people will be renting these office buildings again. I don't know, but in 20 years. Right? And then not long ago, the worst performing sector in the stock market were home builders. And I thought about it. I'm like as a value play, I'm like, all right, I understand. Interest rates are going up. It freaks people out. Mortgages, people don't want to have a mortgage because a mortgage is 5%, not 3%. But I'm telling you, 5% is not a huge mortgage. It seems like it now, but talk to your grandpa. Grandpa will tell you, dude, anything under 10 is cheap. So anyway, so we're freaking out right now that a mortgage is 5%. I get that. But what I also understand is there's a huge shortage of homes available, right? And that people are going to want to live in a house 10 years from now. So I looked at these home builders. Many of them I can buy less than book value. What does that mean? All right. Home builders, these are the ones that build entire neighborhoods. The first thing you do is you buy the land. And then you start to develop the land, you build the roads and the sewage, and then, and then you start building one house at a time and all that kind of stuff. And there are stages to which these home builders borrow money from banks. Great. But they often own the land 5 or 10 years before they even develop it, right? Cool. And then they build the houses, and then they sell the houses and all that kind of stuff. Well, book value means what is the value of the assets that these companies hold? The houses they've built but haven't sold, but the land they own and haven't developed. So you have to understand they took investor money and bought land. Well, if you added up all the land that they hold, which just think of it as future inventory, I paid less. You understand? Like if they own $1 billion worth of land that they're going to develop, I bought the company per share worth less than $1 billion, which is kind of interesting. So I got a discount, but I didn't have to pay for all the other stuff, which is interesting. And so I bought a bunch of that stuff, and I'm going to hold on to that for 25 years. The worst performing, I mean, it was like forward earnings of like, and the multiple was like four or something below book value. I was getting everything for cheap, and now sit on it for 4 years. And I bet you once we figure out inflation and we go through a little mini recession, AKA slowdown next year or the year after, well then 3 years from now, when there's a new recovery, and by the way, I think the Fed will lower interest rates a little bit. So 3 years from now, when there's a mini recession, the Fed lowers interest rates, the mortgages come down a little bit, there'll be a real estate boom. And I already own the companies, and I couldn't have possibly got them cheaper except through maybe bankruptcy court or something. So I'm only betting that the largest home builders in the United States won't go out of business in the next couple of years. Remember, there's really lots of demand. Okay. Oh, Sultan, once you get to know Raymond, you'll know he's one of the nicest guys you've ever met, and he's also very serious. So that's all. That's all that's coming across. And of course, people have known me in some cases for 15 to 20 years. So they're like family, so they're protecting me as well. So you also got to understand, people come in and heckle. These guys protect me. So, right. It's just like, right, Raymond, right? Yeah, he's just protecting me, that's all. Which is good. Don't piss him off. Actually, I don't think you could, but if you did, that would be a problem, but no. Yeah. Yeah, I imagine, Raymond, you might have a personality similar to mine where you're nice and happy and friendly and everything's great. But there's probably a switch where somebody goes too far or does something bad or threatens those that you protect or whatever. There's like, everything's good, but don't cross a line. Don't cross a line. Yeah. remember when I played football in high school. I don't know if you guys relate to this, but you put on all the pads, you put the helmet on, and I'd go out there and you feel like a warrior, but someone would slap me on the back of the helmet and I'd be enraged. Like, there's going to be blood on this field and fast. Just something, I would just snap. It was amazing, just a slap on the back of the head. And that was it. So I'm like, wow, that's interesting. Yeah, you think it's there. Yeah, yeah. No, it's like one of these things like, if there's something worth dying for, yeah, then it's, yeah. Dr. H likes the trolling and flame wars. All right, cool. So anyways, what was I going to do? We go back to oil. Did oil collapse? Let's see. Am I out? Let's take a look. No, look at that. I scalped and I scalped out. What did you guys think? I bought it at 102.25. Took profit at 103.25. See? Somebody said, how do you enter that? And I'm like, that's how you do it. Huh? $1. Remember, I did a 33.99. Johnny took it. Well, thank you, Johnny. That was Johnny's call. Good job. And look at this. If I hadn't taken profit, I'd be at break even again. Oh, that's right. Bitcoin. Thank you. Yeah. I got to check Coinbase. Bitty. So I'm probably in around 30. Got to check the Coinbase. Nice. All right. So what's my price? Guess I got to go to history. Ooh, come on, Coinbase. Where's like my history? When did it come in? Why is this so difficult, Coinbase? They're like, you own some Bitcoin. Great. At what price? Oh, you want to know the price now? No, I want to know the price I own it. Maybe it's under a wallet. Oh, yeah, there it is. 31.43. All right, so let me update this one. 31. Oh, no, that's how much. I have 1/3 of a Bitcoin, but at what price? Gee whiz, so complicated. At what price do I own 1/3? Price per coin. There it is. 31,796. 31,800. 31,800. All right. 1/3 of a coin at that price. Shit. Let me clear it out. How funny. Shit. All right. Let's start again. 31 796. Huh. All right. Anyways. All right. Well, at least I'm in, I guess. Not the greatest, but whatever. Oh, yeah. Yeah. See, look, you're looking over the shoulder. Yeah. Well, the room is only, I don't know, 12 by 12. No, Jim, I asked for it at 30,000. Remember, this was not a investment, but a transaction. So I contacted the person and I'm like, you owe me money. I want my Bitcoin now. And they 12 hours later, they're like, okay, here's your Bitcoin. So anyways, I got a third of a Bitcoin. So now I just got to sit around. So it just, and then of course there's spreads and fees with Coinbase and all that. But anyways, that's my effective entry. So we'll see. So I have to play with that. Like, so when do I convert it to dollar? Which is, you know. So anyways, it's only money. One of the things we were talking about in the day trading group is if I held this position and Bitcoin went to $100,000, it'd be 30 grand instead of 10 grand. And I'm like, who cares? Like, there's only, even in that case, we've never even been to $100,000 on Bitcoin. It's only 3 to 1. Right? I just made more than that percentage-wise, if you will, or reward risk-wise. You know, I could take that out on oil any given day. Like to sit here on a position like that and hope it goes to 100,000. But then again, you're like, well, then you should use some leverage. Yeah, okay. Then it'd be leverage trading. But that's not really what I'm doing here. Sultan says high probability it'll go down to 28,000. Yeah, and I ain't saying that. This was when we hit 30K. Right? How do you say it? Right? Once we got down in here, I called an option basically. Somebody owed me money, so I'm like, I want to get paid. We hit 29 or 30. Right? We're right here. I'm like, I want to convert that debt into cash. So you have to think about that. Well, it takes time. So I converted the debt into cash, and that was now the conversion price. So it took a while. So there was this level of illiquidity. It took 12 hours or so to convert the debt into cash, or in this case, into coin. And now it'll even take some time and some money to convert it from Bitcoin to dollars. So it's more like, when do I want to hold it? Well, I could hold it for 3 years and have it go from 30K to 100K. Okay? But that's only 3x. And I can do better than 3x in so many other things that, like, I wouldn't want to do Bitcoin. Now all you have to say is, well, Wayne, why don't you leverage up and then do Bitcoin at 10x and then go for 30x? Well, that'd be better. Okay, that'd be better. Fine, gotcha. But I already got all of that in Forex. Like, I'm not against crypto, and I'm totally fine with trading crypto. Totally fine. Everything's cool. But it's just, to me, just another thing which is now highly correlated, in my opinion. Well, Patrick, I'm just saying, it's just not enough. It's just not worth it. It's not big enough. Without the leverage, it's just like to give up. I don't know. Just I can take the 10 grand, put it somewhere else, and just do better. Yeah. So there's just better alternatives, right? Patrick says, has Bitcoin become an everyday part of life in America? No. No, it has not. In everyday business? No. No, you have to understand, like, I'm a Forex trader, but also before that, a global entrepreneur, right? So I know people all over the place, all over the world. So when it comes to the old school way of getting paid was through Swift. Swift took, 3 days to clear and was very expensive. And now, as a business, to be able to receive a Bitcoin transfer, it's pretty fast. It's hours, not days. And it's expensive, but not grossly expensive. Okay? Right? So if you received $1 million worth of Bitcoin, your cost is probably, I don't know, 10 grand. And if it was something, if you were to receive it via Swift, it'd be slower and much more expensive. Because the banks are going to charge you, the paymaster is going to charge you, but the bank is going to screw you on the spread too, right? So it ends up being pretty high. Patrick says in Germany, they all pay cash. Well, the thing is, here, I almost never use cash. Like, so it's all credit cards, everything's credit. Now, if you look into the history of Visa and the founder and the CEO and all that kind of stuff, they actually look at Visa payments and transfers as essentially a cryptocurrency. The unit of account might be in dollars, but this idea that, they're constantly giving credit, you buy something and then at some time in the future you pay them back. It's almost like an alternate currency. You just happen to have to pay them back in dollars, but there's some interesting digitalness to it now, right? Where they're all digital payments now, and it's almost like an alternate currency. But anyways. So yen, we'll see how it goes. The stock market's opening. Let's give this one more look. Hang on. I guess I gotta open up. Patrick says almost only debit cards. Oh, it probably shows the income level of the neighborhood, for example, the demographics of the neighborhood. Right? That's all. Like, I don't know anybody with a debit card. My children don't even have debit cards. So I'm not making a declaration. I'm just saying, as an economist, you'd look at that and it'd be a demographic issue most likely, and it'd be interesting. I just find it interesting. I don't think there's good. I don't think there's bad. It's just is, and that would then I wonder the spending patterns and what's being bought and all that kind of stuff, and Oh, hey, cool. Looks like MetaQuotes wants to sue me. Cool. Interesting. Cool. What do you think? Should I battle it out? Do 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 do. Cool. Interesting. All right, I might have to move that over somewhere or just maybe stop that business. All right. Yeah, MetaQuotes wants to sue me. Cool. Yeah, I'm too tired to fight them. Got other things to do. Well, so I got a busy day, I guess. Hey, if you want to buy the chart templates, you got about a couple of hours to get them before I have to take that site down. Anyways, anywho, there you go. The life of an entrepreneur, never-ending excitement. So the stock market's going up. Dude, I bought heavy yesterday. And so doing all well. Cool. All right. So peace on earth. May the pips be with you. May your profits be above average. Have a wonderful day. I hope you're the best. If you're in my day trading group, I will see you this evening. And I believe Ryan is running the pre-London court session. So that's all good. So thank you for being in my life, and thank you for all the hard work that you do. It's going to pay off, I'm telling you. So again, peace on earth. May the pips be with you. May our profits be above average. And, a moment of silence for metatraders.com. Looks like I'm going to have to take that down or burn a bunch of money and fight, but nah, I got better things to do than fight. I'm a lover. But anyways, Jeffrey says, why taking down the page? MetaQuotes is going to sue me. See? So anyways, yep. So hurry up. You got a last chance. So see you tomorrow.